Alrighty. Okay, so we're coming up on the seventh week. So there'll be a lecture this week, and then there'll also be a second video put out probably pretty soon. Just reviewing the midterm exam kind of stuff, getting you ready for that. So let's look at that real quick. Schedule wise, it's actually not too bad. If this thing will escape, maybe it won't. Here we go. Um, well, first off, RP now, people, I think people have probably seen this. I talked about it last week. This is an extract out of the syllabus. So they changed the procedures. But I don't think they bothered to take down the old stuff from their website. So it probably makes it a little confusing if you try to make the reservations the old way. Anyway, um, term project, we know about that. Let's get to the schedule. Um, Obviously, you know that where to find this online. So this is where we're at. We're going to be talking about auto homeowners insurance, health, disability insurance, and then the midterm exam. Absolutely no big deal. I put it out on Blackboard. You open up sometime during that next week, um, and you take it, and then boom, you're off to spring break. So no lecture, just get the exam done, and in turn with that, um, get your homework and other stuff turned in that goes according with that. I think that's already out there on the exam. Let me check. Yeah. Anyway, I'll get to it later. There will be a series of all the assignments out there that's required. It'll be in the materials section or content section, I guess it is now, and you turn it all in there. All right. So, six dogs in the house. I raise dogs, so as if you haven't noticed, trying to get these guys to be quiet, especially in the middle of winter when they whatever. Today's exceptionally blustery outside, and so we've been out on a few walks, but it's never quite enough. Background and insurance. So the way insurance works, and this is kind of important when we talk about health insurance, because I'm not a bad person, and I don't think there's that many people that are that evil when they're talking about health insurance. But if you look at the concept of insurance and the way it's addressed with healthcare, it's not it's not really insurance. Taking care of people and doing all those sorts of things is important, but people aren't cars, they aren't houses, they're living things. So it's a lot more complex, and it probably shouldn't even be called insurance because it's just not the way it works. So anyway, it'll be more confusing as we go on, but it's just conceptually, there's some things when we talk about health insurance that seem a bit more difficult. For example, I'm talking around it here. For example, if you have a house and you go to the insurance agent and you say, yeah, I need to get insurance for my house, and they say, well, what kind of shape's in it? Well, yeah, no, it already burned down. If you go to a doctor and say, I need health insurance, yeah, I've already had a few heart attacks. They're like, wait a minute, how are we getting insurance for kind of what would be called a pre-existing condition? So same thing with a car. If you go to a car and yeah, I need to get insurance, it's like yeah, but it's got quite a few dents and it's already nearly totaled. They're not going to give you insurance for that. So when we talk about insurance, it's for health insurance especially, it's such a messed up situation right now that it just doesn't work in the normal concept of insurance. Insurance means that not everybody is going to have a bad day on the same exact day. So there can be a business model made where, say, you get 1 million folks and they all, give some small premium, some small amount of money, betting on the fact that they're not going to crash their car that day. And go figure, the insurance people, they do all the calculations. They know what the propensity is for people to crash cars and all that other stuff. And so they set rates based upon that. And so they can pay for that, few people or 20 people or 100 people out of that 1 million that wreck their car in that given day and still make money and still have a business. And so that all works. And that's how insurance is. It's kind of, whatever, safety in numbers type of situation. And so another aspect that this insurance model doesn't work in is flood insurance. That's why there you may see flood insurance offered through or actually they're just kind of a third party, somebody market flood insurance, but flood insurance cannot be offered legally by a private company. It's a federal program because flood insurance, again, if you have 1 million people insured, but they're all on the Gulf Coast and there's a hurricane or whatever, yeah, you can have every one of those 1 million people um, you know, get kind of screwed on the same day, and the insurance company, after taking people's premiums for 10, 15 years, would quickly, declare bankruptcy on the day the hurricane happened and leave town, and nobody gets any coverage because there's no way that insurance company can cover those kind of losses. So they'd be, deceptively taking premiums knowing that, when it hits the fan, they can't cover everybody. So that's why they don't allow private businesses to play in the flood insurance market. Now, flood insurance is not cheap. I had to get it for a while on a property I bought. In fact, the property I'm recording this lecture on. But anyway, a lot of moving parts. I knew that the property was being reassessed, that it was no longer going to be called a flood zone, and so I knew that flood insurance payment, which was I think it was $3 or $4, maybe $5 a year, was going to go away. So it made the property much more attractive. Anyway, you can't just do that. I mean, FEMA, the emergency management people, need to designate that. But anyway, that revision was already in the works when I bought the place. So anyway, yeah, another thing to know about when you're looking at buying a home, if it's in a flood zone, or more realistically here in Alaska, if it's in an avalanche zone. Okay, we're way off topic here, and we're only on the first slide. Sorry, but there are a number of houses that I looked at, and this is especially true when you're looking at Zillow. You go, wow, that's a great deal. A nice house in Eagle River with a lot of land, and it's cheap. Well, go figure. It's in an avalanche zone, so it may be a nice home for a while, and it may never have an avalanche, but it doesn't matter because the mortgage companies won't loan on a home in an avalanche zone. So you're just wasting your time going to look at it unless you're a cash buyer. And then if you're the person who actually built the home, you're probably not going to be able to sell it because it would need to be another cash buyer who is willing to, endure an avalanche zone. We just had an avalanche this week right across from me, so avalanches are on my mind right now. Anyway, but yeah, there's nothing to prevent you other than not being able to get a loan to prevent you from buying and making what I would consider a pretty bad investment on a home in an avalanche. Unless it's your end all be all and this is where you're going to live and you're going to go to the grave with it, because guess what, you probably will. And I don't mean you're going to get killed. I just mean nobody's going to want to buy it. Anyway, property insurance insures damages your auto, home that are covered. Also protects your personal assets, so people from just suing you. Liability is you being responsible for, you're liable for damages. You're liable through perhaps your negligence, perhaps your carelessness, or just because of your dumb luck, but it was you the one who did it. You caused harm to somebody else, you're liable. Now, liable can be made worse if it's determined that you were negligent. Not only did you cause it, but you caused it because you really didn't care. You have a ditch out in your front yard, lightly covered with snow, and people are walking around your home. Somebody falls in that ditch, it could be a problem for you. And as a property owner, you got to worry about things like that. You do not want to be found negligent because, if this thing does go to court and there are damages, the damages are going to be somewhat higher based upon your negligent behavior. You're probably still going to be found liable, but it may not be as painful if it was, you showed some sort of due regard, some sort of care. Anyway, primary function to maintain your existing level of wealth. So, yeah, if you don't have anything, they really can't sue you. But this again, and I'll talk about this a little bit at some point, but most people who have assets, especially if they're associated with a business, would have them in an LLC or some sort of corporation. And what that would do would mean that if somebody goes to sue you, they can't take your home and your other items. They can only take the items that are under the corporation, only items that are used to run that business. So anyway, if you're doing something that's uh, has some exposure, you may want to consider forming an LLC. But again, a little bit more risk. So exposure to events and perils. Perils, fire, uh, you know, wind, hail. You don't want an insurance policy that typically, you want all perils is kind of the key terminology you're looking for. You don't want cancer insurance. You don't want to have medical insurance only pays if you get a certain type of cancer. Cancer's bad, but there's lots of ways to go, and you don't want qualifiers on the type of insurance. All is, and let's say in the case of homeowner insurance, your home is destroyed. You don't exactly care how it happened. You just want it rebuilt. Risk management. So we talked a little about that. You've risk is unavoidable. If you're going to live, you're going to expose yourself to risk. You try to mitigate it, avoid it, other than staying inside, and then you're going to have a whole new level of risk for just, atrophy and lack of an income and everything else if you don't go outside. Reducing risk, yeah, you can try to do that, but mitigating risk or ensuring, that is having somebody else assume that risk is a better way of doing it. So accepting risk, state of Alaska, for example, they got fairly deep pockets. They are self-insured, so they don't have to hire an insurance company. And people sometimes get kind of curious about this. You don't have to have insurance yourself if you jump through a few hoops. So like, let's say for automobile insurance, you're saying, well, no, you have to have insurance. There's a legal requirement. Well, there's a legal requirement that you be able to cover the liability for any damages you might cause. So if you really want to get, down to it, you could go down to DMV and you can discuss with them and find out what the procedure is. And it'll essentially be you posting a bond. Yeah, I mean, you wouldn't be the first person to do this. There's some high wealth individuals who do this. Post a bond, set aside a certain amount of money, showing that they can cover the damages, and yeah, they can be self-insured. But most people don't have the the time on their hands nor the assets to want to do that. But so we get into this insuring, and that's where you pay a premium to somebody else, to this insurance company, and they, take over that risk for you. So there's limits, and that's again a bit of an issue, but you want to make sure that you have enough insurance to cover, whatever endeavor you're up against. Economic impact, yeah, we don't have much control over these things. So, types of insurance. So, I've kind of touched on things already. Property, casualty, people getting hurt, life insurance, health insurance. So, again, health insurance is kind of its own thing. If you had a policy when you're a young child, but that's not the way they do it. They do sometimes do life insurance policies when you're super young, but that's a sucker's bet. Life insurance is to take care of the people who are dependent upon you. When you're super young, nobody's dependent upon you, and your chance of dying are infinitesimally small. Once you get through the whole infant mortality thing, once you're a few weeks old or a few days old, you're kind of good to go. You're much better off than the parents. But anyway, insurance company operations. So, yep, insurance companies and premiums. So they're set up as business entities, and they do, a lot of math. They have actuarial guys and mortality tables, and which again, in the current era, brings up a lot of things. If they can get access to your DNA, which they would love to have, they can predict all sorts of good or bad things are going to happen in your life, and adjust their rates accordingly. So be careful with that. That's definitely privacy data. So here's a insurance company. Some of the roles. Yep, they take care of your insurance, take care of the injuries if unfortunately those happen. Um, Home repairs, homeowner insurance. So again, the requires for homeowners insurance a lot of times because you have a loan on it. That's what they're concerned with. They want their loan covered. You want a place to live, so you don't necessarily agree on some of the things, and some of the requirements, especially homeowners. The insurance companies, like anything else, they'll try and whatever, get you for a little bit extra. Let's say you're living in a nice, whatever. Different people have different impressions of a nice home, but let's say it's, a $700,000 home, and they're saying, oh, you need, $700,000 worth of insurance on it. No, not really. How much of that value is in the property, and how much is in the home, in the structure? And so they've tried to do this with me. They say, "Oh, you're underinsured." Not that I'm living in a $700,000 home, but they'll do the same game, but with lower numbers. And they'll say, "Well, you need, such and such amount of insurance to be fully covered." The land's not going anywhere. I mean, well, in most cases, unless I do live on a river. But anyway, in most cases, I don't expect 100 acres to be eroded in one day. So I think I'm good on that part. All I need to worry about is getting the structure rebuilt. So don't let them tell you you need more insurance than you need. Health insurance, it's its own thing. We'll talk more about that as we go. Long-term insurance. Yeah, yeah, it's a grisly subject, but yeah, nursing homes are super expensive. But the bad news, if you didn't know this pre-COVID, when they talked about, oh, all these people in nursing homes are dying. I hate to say it, but if you go to a nursing home, this was pre-COVID, post-COVID, within 6 months you're not, you know, alive anymore. So again, me, I have no problem going international. I'll be in the down on a beach in Mexico, living out my final days, drinking margaritas till it's over. Not gonna. I certainly would not go to a nursing home in Alaska if I can't go outside. I'm not staying here. You become disabled. Yep, theoretically it can work. I kind of tested this with a company I worked with. Horrible, horrible process. Just they were never going to pay. Never paid a dime. I wasn't that disabled and it wasn't permanent. But yeah, they made it clear from the outset that any money you gave to them was down the drain. Their ratings and everything else online was just horrific. Not going to get you any money. And then, as I talked about before, when you die, people, relying upon your income. So it's not like, this is where like a young child have a bunch of insurance on that. That's sick. If I lose a child, I do not want to, win the lottery. And for people who probably a lot of you in a situation where, you're just getting started, you don't have any dependent upon you, don't feel guilty, you do not need insurance. On the other hand, if you say are married and you have young children and you've got a new mortgage and you've got a lot of things, you have a desperate need for life insurance, more than you'll ever need it in your entire life. But the good news is you're probably quite young. That's why you have all these requirements. So get the life insurance. Just term is perfect, and it's super cheap because you're young. And you can help yourself by not smoking and not doing a few other things because they will ask those questions. But we're talking, whatever, $40 or something for $1 million. worth of coverage because your propensity to die is quite low. On the other hand, as you get older, if you still have that term insurance, it's going to get super expensive because your propensity to die is quite a bit higher. But you don't need it. I don't have any life insurance, and I absolutely am fine with that. Because if I was paying for life insurance, it'd be quite expensive, and I don't have anybody, dependent upon me. The kids went to school, property, whatever. I still have some loans out there, but there's more equity than there is a loan, so whatever. It's much better off, and the money that you would be paying to life insurance, or I'd be paying to life insurance, can be used for other things like buying more property and more stuff, which is far more valuable to the beneficiaries than some life insurance policies. So there are more complex life insurance policies, and I'm probably going to make some enemies here if there are life insurance people out there, but there's all these whole life, universal life, all these different complex products where it's a hybrid insurance investment product. And anyway, I wouldn't do it. Absolutely. And I'm not alone. And I don't know of anybody, in fact, anybody who does recommend it, I would question their wisdom. Most of the stuff is sold on commission, and their investment strategies are not quite as good as real investments. It's the returns, just the commission. It's like buying loaded funds, or funds that you're paying a commission on. Paying commissions on everything because you've got an insurance agent involved who's working on commission. And because the products are so complex, they have a fairly involved job to explain it all to you. But anyway, it's life insurance can be quite simple if you think about it in the right terms. All right, role of insurance agent and brokers. Yeah, you all can shop for whatever you need online, and insurance is probably one of those things as well. The value added of a lot of those folks is, you know, whatever. Insurance agents and travel agents have kind of gone away. Bank tellers are barely hanging on. ATMs have replaced that. There are certain things that can be done better over the internet, and I think insurance is quickly approaching that realm, because especially the cost comparisons. There's certain things you look for in a company. You don't just go with the cheapest, but you have to know a few of the third party raters who take care of those companies, AM Best and whatever, different companies that evaluate, that aren't the insurance companies. They are the ones who evaluate the financial solvency of the insurance companies, because the important part is that company is able to pay when you have an issue. And then, obviously customer service is important. So, auto insurance, jumping right into that. We're all familiar with that. There is a requirement to have some types of auto insurance, so that would be the liability, right? If you want to have your car, paid for, you own it outright, and you don't want to carry any insurance on it other than liability, you can do that. And the liability will mean that the other person's car, to the extent you have the insurance, will get fixed and their injuries will be taken care of. But you are on your own. And a lot of times that's not a bad way to go. Now, if you have a loan on it, the creditor, the people making that loan, are not going to be interested in that. They're going to ensure that their car, in their eyes, since they have the loan on the car you happen to be driving, they're going to want to make sure they're protected. And so, yeah, as we know, costs are up there, and personal injury. I've got, unfortunately, I've met a lot of attorneys, and I've got some of the best personal injury attorneys I know down in Anchorage. And they're the nicest guys, but they are not. They wanted to work with me on some of my business projects just because I think they just find their personal injury just soul crushing. I mean, it's people, somebody hits a moose, the passenger gets hurt. Well, you can't sue the moose. The driver, probably did her best to avoid the moose, but didn't, and the passenger gets hurt. So who gets sued? The driver, and to the max extent possible. And it's just it's a sad thing, and they get quite a bit of money. For me, I've been looking at different businesses, especially ones that involve the sale of alcohol, and their advice is do not do it. You can't afford the liability because the personal injury, they will go after you, and do quite well. Not, their clients might get some money, but in a little bar up the street that was sued, it went completely out of business. And I don't know that the grieving family got anything, but the lawyers got the liquor license, which was quite valuable. Auto insurance. So contract between you and the company has the specifics in it. And again, you have some control over this by the type of vehicle you have, by your age. You don't have a lot of control over that, but it's going to affect the policy amount, driving record, other items. So things that are covered in liability, so bodily injury, so that's injuries, obviously, and then the property damage. To include government property. I took out a bit of guardrail one time. I still haven't got the bill. I think it's probably coming. But anyway, things happen, and they charge you by the foot. So costs can get quite excessive, especially when you start looking at some of the items. So, medical charges, they can go through the roof. 100,000 sounds like a lot of money, but you get a few people involved. For all the people combined, and then 50,000 for property damage. I don't drive super nice cars, but I'm sure there's quite a few of you out there with cars that your own car is worth more than 50 grand or approaching, and you start stacking up a few, and you have a real problem. So the state sets minimums, different states for different people. So we have the property stuff. Here's some more medical payments. And then here's different states. And there's not a lot of correlation. Some of the states you think would be super high, like California, 5,000 for a vehicle, really. They're always quoted the same way, 50, 100, 25. So when you see those three numbers in succession like that, and that's how they're quoted, let me roll back to that. So per person, all people combined, and then the property. So just looking at those property numbers, it's kind of astounding how low they are. I mean, 5 grand, really? There's a whole bunch of states like that. Texas, 25,000, but very low on the medical. Anyway, and then underinsured, which is a fact of life. So that means your own coverage stepping in to pay for somebody who didn't have insurance. And, it's like everything else. One of my daughters was involved in an accident with an uninsured, and they probably had never had insurance, and they might have got a ticket, but anyway, wasn't a big deal. Collision. So this applies to the damage to your own car. And so, yeah, I actually do have collision on some of the cars because, it's mainly just the snow and ice. But yeah, I crashed a car just a few months ago, and 6 months ago. Anyway, did some guardrail damage, and it was an old car, but it was insured through a classic car insurance thing, so that was kind of cool, and it was nice. And it was ice, so wasn't my fault completely because I was the only one driving. But it wasn't a normal situation. It would not have happened in normal conditions. So deductible. So let's say you have $5,000 worth of damage to your car, and you have $1,000 deductible. The insurance company is going to come up with $4,000 to pay for those damages, and that first 1,000 is your deductible. That's what you pay. So that's one of the ways that you can adjust how much you're going to pay on your insurance is by setting your deductible. So I tend to go with a pretty high deductible. I literally have had $1,000 deductible on a number of vehicles, and it does lower the payment, but it does kind of leave a mark when you get hit with that. Um, but I drive a few dented cars. If it's something minor and you report the accident, um, you know, they're you're going to get dinged, and your rates are going to go up just because the insurance company pays for the damages. Um, I had a homeowner situation here where the floor got ruined by a leaking pipe, and it was about $4,000 worth of damage, and I actually had a State Farm agent. And it's frustrating, but she was honest. She said, "Yeah, we'll pay for that damage, but if you report it, we're gonna up your rates, and we're gonna get our 4,000 back. So, do you want to still report it?" And I ended up not reporting it. But fortunately, his house is getting condemned and torn down, so couldn't be happier. Other provisions. So you can get towing, you can get all kinds of cool stuff, roadside assistance, you know, um, different things. I mean, I had a policy in Germany where it was for the ski resorts where they'd fly you off the mountain and they would get you and your pet home. I mean, pretty elaborate. And if it's a good deal, it's a good deal. I mean, I know in Alaska here, I've never purchased them, but some of these evacuation things and helicopter evacuation. Me and a buddy crashed a little Piper way back, in the bush a while ago, and that's only been about a year and a half or so. But we were completely fine, but we were very concerned about who was going to rescue us. We were more than willing to walk out, which we could have done, but Air National Guard showed up, and so it did not cost us. But if it would have been a private service and we would have requested it, we could have got quite a hefty bill. So look at some of these different items and things that are, especially if you're an outdoorsy kind of person, having an in reach and having an ability to communicate, but be very careful what you ask for. I know people who have said, "Oh, I need to get back to work." Well, they took that as basically a command to launch the fleet, and the guy, to get back to his, you know, barely above minimum wage job had a $27,000 bill. So anyway, each to his own. So we talked about liability damage to your own car, that's collision. So liability, that's a good thing. That is a state requirement. Does everybody follow through with it? No, not exactly, but you need to have that. And if you don't, you're some degree of a criminal. Um, and then the medical part. Yep. Comprehensive is kind of the cats and dogs, fire, theft, vandalism. Again, it's kind of like the house. The house gets destroyed, your car was in the garage. Is that a homeowner's claim? Is that a vehicle claim? I really don't care. I just want, the car back, a vehicle back. So comprehensive, um, things like windshields and stuff like that. If you do have that type of coverage, that's where they'd come in. So, what are they set on? Value of the car, repair record of your car. Yep. Your age, your gender, or I don't even know if that's a correct term yet, but if you're a dude, you're going to pay more. Your mileage. How much? Be careful. They're trying to put some of these devices in there that, oh, it's a little, cool device that goes in your vehicle and will lower your rates. It's basically a GPS that keeps track of how fast you go, how quickly you stop, how everything you do. So it might be a way to get your rates down. It might not. Depends on how you drive, and then your driving record. So if you've got a Dewey or two, you're in big trouble. A couple tickets here and there, that's also going to present more of a risk to them. Your location. Yep. Based upon this gets more into the lawyer stuff. Some of the states are known for having very, very high things. Your driver's training, your school performance if you're young, your insurance company. So again, you can shop around. Um, I'm not that loyal to any company. In fact, I had a local company. And I just found them aggravating. They had more time than I did. They were always calling me up. This was on a homeowners thing. They always wanted to take pictures of the home and do all this stuff. I'm like, just, I'm not making a claim. Just, I don't want to. When I need insurance to file a claim, I'll call. But other than that, it was just another thing in the day that I hadn't experienced before. So certain states, so this is average insurance premiums, auto insurance. So California, New York. I mean, there's a lot of different factors. I would imagine that Alaska would be a little high just due to some of the driving conditions. But in terms of legal, I think it's probably a little more squared away than California or some of the other states. Homeowners insurance. Okay, so big thing with homeowners insurance is events of damage, theft, personal liability, and really, the crazy thing, I had a pig get hit out in the road. Probably not something too many of you can relate to, but anyway, that poor Petunia, she was going to go down under the homeowners insurance. It was funny because it was with State Farm is who I had the policy with. And some guy from Arizona calls me up and he's like, I'm representing, one of our clients from Arizona who was involved in an accident and I guess collided with one of your pigs. Who's your insurance carrier? And I said State Farm. And they said, oh. And anyway, about 3 days later, they said, no, we're not going to do anything. So, you know, since it was going to be collateral damage to their own firm, they decided they weren't going to try and say that I was at fault for a pig getting hit. Anyway, I was going to fight it anyway, but it didn't have to come to that. Events, fire and burglary, certainly, and structured in 6 pastures. Different perils. Again, perils are, fire and earthquake. Earthquake's its own animal, but you want to see what your coverage is, especially, in the area of earthquake. And unfortunately, you're going to find an earthquake where you may not have the coverage. At least that's what most people found. Didn't have the coverage they thought they did up here. So check into that, and make sure you know what coverage it is that the coverage that you have is what you think you have. So again, you don't see earthquakes in there. You're good for riots, but no, they don't want to cover some of those big events like an earthquake that's not far away from a flood in terms of being able to affect a lot of people. And then again, they're going to get down in the specifics. Okay, was it a flood? Did you have flood insurance? Or was it, ice or something else? So there's a lot more involved. Earthquakes, floods, termites, war, nuclear accidents, certain things that you're just out of luck. Renter's insurance. A lot of rental policies require that you carry renter's insurance. It's not a bad deal. Renter's insurance isn't very expensive. It doesn't cover the structure or anything because you're just renting it, but it just covers your property inside. And, you'll see smoke damage in a lot of these things, and smoke can be kind of a big deal. Water damage the same way. They may put out the fire, but the smoke may ruin things, and as will the water. So you want your items replaced. They'll also give you this option. You may be able to get a cheaper insurance, but if you look at it, it's not a replacement cost. It's a market cost, market value. So things like clothes and even furniture to a certain extent, the value, between what the used value is and what the replacement value are can be huge. So you want to be careful with that. Other structures, condominium. So on a condominium, you just own from the paint inward. You don't own the structure. Mobile home. I imagine that's quite high. And then cash value, not replacement cost. So anyway, you want to see some sort of replacement. If they're saying cash value, they're talking like market, like used value, which is going to be a disappointment for you. Property damage. So here we go. Cash value, replacement. And again, the financial institution, they're just concerned about themselves, really. Cover the mortgage. You can do some curious things here. I've got the property line of my home is makes no sense, but what it does is it excludes this really sketchy building that's useful. I use it as a shop, but I would not want to insure it, and I would not want, the mortgage people to look at it and try to assess a loan on it because it's not going to pass any inspections. So I excluded that and made a different property on it. Personal property up to specified amount, home inventory. So a couple things in here. If you think, like, let's say you have, you're really into photography or really into computer stuff or whatever, jewelry, and you've got a bunch. So let's say you've got any one of those items and it's like $10,000 worth of value, and you have some generic homeowners policy and you think you're good. You're probably not. If you read the fine print, you'll see, we'll cover any one category up to a limit of say $1,000 or whatever it is. What you need is you need some honesty. You need to go. I've got a lot of this type of equipment. I want it specified in the policy, or I want a separate policy rider or an addendum or a different contract, some sort of document that delineates that the amount, the value of that stuff in that one specific category to ensure you have coverage. If you don't, yeah, you won't find this out till you file a claim and they say, yeah, we're not paying for that, you know. And maybe it's guns, maybe it's whatever, but read the policy and see what the exclusions are and get the additional policy if you need to. And sometimes some of these policies too, where it's like, the car I crashed a while ago, it was an older Corvette, so it was a classic car, and it was insured for something like $100 a year through this classic car company. It was a great deal, and unfortunately, they had to pay off like within months of getting the policy. But it was pretty hassle free. My regular insurance company, they go, oh, yeah, that's just an old Chevrolet. They wouldn't give me the appraised value of the thing. Not that the appraised value was that high. It wasn't that nice a car, but anyway, to them, it's just an old Chevy. To me, it was, a Corvette. So anyway, Corvettes in Alaska are pretty stupid. So go figure. Personal property up to a specified amount. So home inventory, you can do this digitally a lot of times if you got a lot of stuff, some sort of video or a CD or, at least an Excel spreadsheet or something with all your expensive items listed on it would be nice and very helpful when trying to get things settled. Personal property replacement cost, personal property floater. So again, I called it a rider. You'll see it sometimes called an addendum. But anyway, itemize those valuables, the super high value items. You want to make sure that that's good. So this happens, So, as you do, your pig walks into the street and, somebody in a Tacoma hits it. They think they won the lottery and it's your liable because your pig was, wayward. Anyway, it could have been quite serious had there been some injuries or something else. It didn't get to that point, well, other than poor Petunia. Other types of provisions, additional living expenses. So if you can't live in your home because it's, under fire and you got to go to a hotel or something for whatever length of time, you would like to see that sort of language delineated in your policy. Factors that affect the homeowner's insurance. Yeah, there's more than this. The deductible, the location, certainly, but they'll want all sorts of things. Discounts for obviously if you don't have smoke and fire alarms in the home, get them because they're going to ask, and if you don't, you're going to have to get them anyway. So get them beforehand. Some sort of burglar alarms helpful. Some of these other things you can't really change. The location of the closest fire department. But there are other things that they'll often come out. They'll want to have pictures. They're looking for chimneys to see whether you got a wood stove or not. They're looking for trees and brush that are close, or some sort of record of forest fires coming through. There's lots of different things that they're looking at. The construction, the age of the home, all kinds of stuff. Price of lumber. So tornado alley, obviously, hurricanes, all kinds of weather. Not a whole lot going on in Idaho. So anyway, I mean that is going to be some of the things that are going to affect the prices. Increase your deductible, improve your protection. You can do this if they're going to give you a deal. Stay with the same insurance company and shop around. So they're kind of dyslexic here. All things being equal, to stay with the same insurance company. But by God, this one company, I just switched from them because they were just such a nuisance. They wanted to keep coming out to take pictures. Renter's insurance. So we talked about that. Good to have. We're not talking a lot of money. You guys are probably still have quite a few people who have renter's insurance, and it'd be nice to have liability from damage to a person on their property. That's why a lot of times tenants will insist upon it because they want to use your policy before they have to use their own policy, and it costs them nothing. As a landlord, I just put on the lease that you must obtain renter's insurance. So. Umbrella, that's a good word to see. I don't care how it happened. I don't care what I'm being sued for. I just want $1 million worth of coverage. And if you're a business owner and you've got different things going on, it's not a bad thing to do. I think it's about $800 a year, get you about $1 million worth of coverage. Again, it depends what things you do. I don't think my policy covers animals for some reason. So now that I don't have, violent pigs around attacking people, it's not a big deal. All right, so that was the property stuff. Here's going to be the health stuff. The health stuff's going to go fairly quick because it's a moving target. You see a lot of this stuff in the news, so I've added a few things in here. Number one, this is to kind of show you, and everybody talks about, the Affordable Care Act or Obamacare or whatever. Only 2.9% of the people are actually using it, So it's not as big a deal. One, because it's kind of expensive. And so people who can't afford it, they're typically on Medicaid. Medicaid, and this is for children. So the different Medicaid programs, sort of the welfare-ish, if you want to call it, that those cover, people who don't have the finances. If they qualify for Affordable Care Act or don't qualify for Medicaid, then they're first in the Affordable Care Act and pay for it themselves. But for most people, traditionally, they get medical coverage through your employer, and the employer can subsidize it. And also, they get it for a better rate because they have, large numbers. It's a big group policy. So that's a huge perk when you're going for a job, is to have, medical insurance. And unfortunately, some people end up trapped in their job because they'd love to quit. They're not making that much money. They don't like the whatever, but man, they love the benefits. They love this health care, not having to worry about it. And that's a thing. Then there's this other, so other things. But when they say underinsured, mm, they're not. This is getting a little political in here because people can choose to be just like in auto insurance. They don't have to post a bond. If you go into a hospital and you say, "Yeah, I'm a cash payer," boom, your rates are about one quarter what the insurance billing process is, because the insurance process is onerous. That eats up a whole lot of time and activity on the part of the hospital. And then, the insurance companies typically don't reimburse the full amount. And then there's some losses in there, and there's other things going on where it's really they can offer people who just walk in and say, I want to pay cash for services. They can give them a pretty good deal. And it's one of the reasons, like, for example, laser eye surgery is pretty darn cheap because there's no insurance involved. Laser, insurance doesn't cover it. So people go in there and they pay for it themselves, and you cut that insurance part out of it, and suddenly things are quite a bit cheaper. So anyway, but yeah, the Affordable Care Act, Obamacare, that iteration, nobody likes it. And I don't think, I'm not saying from a liberal or conservative perspective, the conservatives were never a fan of it, and the liberals, they want something more. They want maybe a Medicare for all type thing. Medicare, the one thing I should have talked about here, this is for people. I guess you can get into it when you're 62, but primarily 65. But anyway, for older folks, Medicare. Most people have Medicare. They have some other coverage as well. But, these are frequent flyers here with the older folks. May only be 17.2% of the people. But, man, that's by virtue of their age. They're going to be quite a bit of the services taken up. But anyway, vast majority, about 50% of the people are not affected by any of these other programs. They get insurance through their employer. So, private companies and the government. So we talked about the two different ones. Do have to plan for it. 1 in 5 workers, but you can electively be uninsured. And there's some people that just aren't insured. But anyway, hopefully the insurance they'll reach some sort of political resolution on this and go one way or the other. Because either Medicare for all or completely, private insurance would work. I mean, for most of y'all, if you're college age, your medical insurance would be quite inexpensive. The problem with the provisions that are out there now, especially under the Affordable Care Act, they're trying to get the younger folks who don't need the services to pay for the older folks. They're trying to balance that out, and it doesn't work out because it makes the insurance for younger folks basically unaffordable. Pre-existing conditions. So again, this is where it gets very ugly and lends you to situations like Medicare for all, where there's universal health care, because we're calling it insurance, but it's not the insurance model. The insurance model is there are not pre-existing conditions, pre-wrecked cars and pre-burnt down home. That's not insurance. So that's where a lot of things get contentious. Other coverage, rehabilitation, mental health, which I guess we just don't do. So pregnancy, that's obviously a consideration and a coverage. Dental insurance and vision, those are usually sub-policies type things where you have separate insurance. So, a lot of times with your employer, you'll have medical insurance and then you'll have optional dental and vision plans. Determination of unreimbursed medical expenses. So like we mentioned on the taxes, when you're doing your taxes, you can deduct unreimbursed medical expenses, but you've got to be quite ill. 10% is the threshold. So let's say you're making 100 grand, you have to have $10,000 worth of unreimbursed, not $10,000 worth of medical expenses, $10,000 worth of expenses that you were solely responsible for before you can even begin to deduct it on your insurance. So expenses not covered, so you have to know what your plan is. And then you can set up some of these spending accounts and other things. So when you go to work with an employer, you want to pay attention during this benefits section, and it's something you definitely want to think about beforehand and maybe study up and look at for your term paper, because what's going to happen is you're going to be a brand new employee and you don't want to be that guy asking a bunch of questions and make it sound like you're unhealthy or money grubbing or whatever. But when the HR people come in there and they start laying out all your options, you want to know a little bit about it, because what is typical now is what they call a cafeteria plan, where you choose the benefits and options you want. And if you want to choose nothing, well, which is a great option. If you've got a spouse who's got great medical insurance, then you choose to go with their plan and you opt for nothing and you make a little more take home pay. But, that's not always the case. The option with the employers is most employers, the deal is if you go to work for an employer and they say, we'll pay you, 100 grand without any benefits, or we'll pay you 80 grand with full benefits, most people are going to migrate to the 100 grand. So the employer is almost incentivized to strip down the benefits package so that they can offer a higher salary. And especially with younger employees, they're more apt to go for the money than they are for the benefits. Not everybody, but anyway, you have to have some responsibility and some knowledge to know what to select. Medicare, so 65, yeah, you can actually, yeah, it is for 65. I'm sorry, Social Security you can get into a little earlier. Part B optional coverage, the drug coverage. Anyway, I think we're all a ways away from this, and it's going to change, I assure you. Medigap, little insurance companies, to older folks have a lot of time in their hands and a lot of medical concerns, so they've got more laws, more things involved, prescription drug benefits and other things. Medicaid, okay, so healthcare to aged, blind, disabled, and needy families with children. So must meet the guidelines, state by state basis. So if your state's got attractive benefits, that can be good, but it also can be anyway. Affordable Care Act, talked about that. So they have called us Obamacare in the past. Remains a contentious, put it mildly. Long-term care insurance. Alrighty then. Premiums can be quite expensive because if you spend a lot of time in a nursing home, it will be expensive. Now, there are other options too, though, where let's say, you have some person, even a family member who's having to, modify their job or spend a great deal of their time to take care of you at home. Well, in a perfect world, it's fair that that person be reimbursed since you're not having to go off to a assisted living facility. You're able to stay in the home, which is better for you, better for everybody, and financially, it ought to be better for that person who's having to provide that care. So, most things, that's typically a thing that can happen, and it's deserved. Long-term care, yep. Stop loss provisions. Again, this has to do with nursing homes. age, health condition, shop around, compare premiums. So if you get this type of insurance, if this is something that appeals to you, some peace of mind, if you do it young, granted you're going to be paying premiums for a longer time, but even so, they're going to be much cheaper. If you're you know needing a nursing home in a matter of years, that ship has probably sailed. You're probably going to be uninsurable. Family's health history, again, access to all those medical records is what they'd want. So that may not be on your best behalf. Disability. Yeah, there's way when they're talking own occupation, or any occupation. Let's say you're a roofer, you fall off the roof, you have disability insurance, so you file a claim because you're jacked up, you can no longer climb a ladder. Yeah, but you can still sit at a desk, so we're not paying because you can take another occupation. If you want to stay, if you have insurance in your own occupation, then that's a different thing. Disability insurance, individual disability, employer, and then insurance from Social Security. But this one company, it was a third party that was associated with a corporation I was working from, and they were just you absolutely. I mean, I was quitting with this company anyway, but they were. I was looking for their website, and I had to muddle through about 5 or so other websites that people who were so frustrated with this company had put together just to badmouth. I mean, they were absolutely, and I dealt with them just a little bit to explore it, and yeah, they're not paying anything to anybody, and any money you spent, and then the company had given me was part of the employer benefits package. You've got disability insurance, private insurance. No, I had nothing. So it was kind of a scam. Workers' compensation. So there's some state programs that kick in. This Social Security, obviously a federal program. If you are injured, and that's why it's very critical whether it happened at home or at work. And obviously, if it happened at work, more doors are opened. If you did it to yourself skiing or something like that, might not be quite as good a situation from a financial standpoint. Disability insurance provisions, amount of coverage, probationary period, and anyway, all kinds of fine print, which in this case they were not going to pay. I actually had been with the company long enough. It wasn't going to be the probationary period. It was just going to be other aspects of it and their guidelines, and they were spending quite a bit of money, not on their clients, but on avoidance. Waiting period, length of time for benefits, non-cancelable, renewable. So, but do the due diligence. I probably should have researched that more. I wasn't relying upon that money, but there was a situation where I was going to have just a procedure done, and I was going to be, not able to work for a certain length of time potentially, and I checked into it enough to know that I was going to get nothing. So that's it in a nutshell on the different types of insurance. We're going to cover life insurance in greater detail. Again, like I said, term insurance is kind of what you're going after, but there are other policies that I'm going to talk to. So there's going to be a separate video thing that if you want to do well on the exam, you will probably want to go through. I'm not going to read you the exam, but I'm definitely going to have the exam close by, and I'm going to make sure I'm going to cover all the material in there. So no proctor required, 40 questions, multiple choice, 60-minute time limit. It flat shuts down at the end of 60 minutes. And again, watch that video. You're not going to need a calculator, but anyway, if you want it there for whatever, it's not open book, but again, 60-minute, 40 questions. You wouldn't have the time to look up things. And it's not going to be that type of exam. You'll either know the material or you won't. Time's not going to be there's you're not going to have enough time to do that much with it. And I'll get that posted pretty quick once I make it. Good luck, and the exam window. I'll go into the details on that on the exam thing, but it'll stick to the syllabus. It'll be open for 1 week, and turn your homework in before turning in or opening the exam to take it. Good night.